Okay, hi there, guys. Welcome to Monday's market review or week ahead by Bretton Financial Trading Academy. My name is Kenny Simon. So today is the 24th of May, 2021. So we are already ending May very, very soon. So we are looking at the week ahead of us from today, the 25th, 24th of May, right up to Friday, the 28th. So we've got these 5 trading days in May for this week, and we want to look at what's happening. And a couple of things to highlight as well is with regards to news that are happening and various asset classes as well, certain areas of concern, and also, of course, trade ideas, trade signals as well, with entries, exits, suggested stop losses according to yourselves as well. Okay, so brilliant. Good to hear that, Mr. Palani. Brilliant. Okay, so we can actually start, but just before that, I want to highlight a couple of things that has been highlighted in the news. We want to be very careful this week, mainly because we may be expecting something that is called speculative mania. Now, speculative mania is when we have all the meme stocks. We call it meme stocks, M-E-M-E. Stocks like for Dogecoin, for game, I think it's called the game GME, also including Bitcoin and all other things, may actually be going up. So this is mainly because they are called meme stocks, mainly because they are not stocks or assets that goes up because of the performance. They actually go up because of things that are tweeted, social media, something somewhere out there that are going on that can actually create a viral type news and then push up the prices. So it's exactly like what Elon Musk has actually tweeted, for example, that just made Bitcoin fail because he said that he's not using Bitcoin, and then he said that Dogecoin is the crypto of the century, all that kind of stuff. So then the public starts to use authoritative figures like Elon Musk or various other ones to actually just get into the whole flow of buying it, and then that becomes a meme stocks, M-E-M-E stock. So this is basically what is expected now with speculative mania. So this is something that could actually happen. That means all the ones that have dropped would actually come back up again, because all the people who have actually bought are mainly a different target group, different age group nowadays as well. So all these meme stocks type thing, which basically consists of Dogecoin, now Cardano as well, is actually most probably going up as well. All these coins are basically gossiped in the market by all these communities and forums and all that. So that's why it's called meme stocks. So it's not stocks and assets or cryptos that actually go up because of performance. They are not because of performance. They are all because of the hype, because of marketing, because of forums, news, gossips, all that kind of stuff. Okay, so that's why this is what is expected to actually go up. So the meme stocks are most probably going to hit high. So how would it actually impact the whole week for gold, for dollar, and various other things? So this is what we want to know for this whole week, so that we know what we exactly could actually trade. Now, for gold, at the moment, gold is actually going through a 4-month high. Let's take a look at gold first, so that we can then go backwards and look at US dollars as well, US dollar, and what's happening in the US. So with gold, it's actually at its 4-month high. It's got its psychological level at the 1900 at the moment. So we are in the midst of awaiting our 6th take profit at 1897 area. But then watch out for 1900 area, because the 1900 area is a psychological level that could actually be a very significant resistance area as well. So now we are waiting for what's going on in the US, especially with the inflation, also with regards to various other things. There are many other things that are actually happening almost the same time, which basically gives it a little bit of a hint that certain things can actually happen. Now, we also have Chinese buyers. They are actually still buying gold at the moment because of their imports are coming in very, in a high level. If they are importing a lot, that actually means they want to actually hedge their imports because they are an exporting country, right? So if they are actually starting to import because they want to balance up, the whole thing that's been happening in China with recovering from the COVID and various other things. So they hedge with gold. So they're buying a lot of physical gold at the moment, the whole of China. So that is also showing in the ETF for gold. We have the world's largest gold ETF. It's called SPDR Gold Trust, which basically the tick symbol is GLD. So that has actually been going up for 3 consecutive weeks. That is in the equity side of it. So usually it's a sort of a hint that yes, we still have got room for gold going up. So these are the fundamental reasons. And then we want to go into the chart later on right now to actually look at the technical perspective so that we can marry in both technical and fundamental. So on the fundamental side of it, this is what's going on. Coincidentally, I also found out that the world's largest mine for gold is actually in Papua New Guinea. They're actually undergoing, it's called Lihir Island. It's in Lihir Island in Papua New Guinea, which is the largest gold reserve, the gold deposit. So it's like a whole island that is basically, you've got, thousands of meters deep. It's all covered with gold. So you've got a lot of gold to actually be mined from that island. It's managed by the Germans. So we've got German engineering company called Beur, I think, BEUR or something like that, BEUAR, if I'm not mistaken. And they are the ones who are the drilling, not drilling for oil, but the excavation and the mining company for the gold. Now, what they are installing at the moment is the geothermal wall because the whole island is actually beside the sea, and they are building a 3/kilometer or 1/kilometer to 3/kilometer wall to actually separate the heat that is generating. So the heat that's generated by mining the gold is very eco-friendly sort of way, because they are actually mining the gold in the world's biggest mine for gold, but then they're turning it into electricity as well. So there's a lot of heat going on, and it's bordering the sea, the bay area, right? So they are building at this moment of time. I heard that they are actually literally building the wall for that geothermal engineering that is going on. So that might actually reduce the output of mining for a while. So I see that all can actually be part of increasing the price of gold as well. So because if you've got a bit of a delay because of some updates in the site, in the website as well, then you've got physical engineering works or construction works, then that might slow down production, mining of gold as well. And that's the biggest one in the world, in Lihir Island in Papua New Guinea. Okay, so that's just an update, because a lot of stock traders are watching all these things as well, because they are buying stocks of the company that mines the gold. So then it does actually impact what they are doing with the gold in the biggest mines of the world and things like that. And that might then ripple effect into some things, because if the importers are getting slow buying of the gold, then that might actually then increase demand but lower the supply. So if there's lower supply, increase the demand, then the gold price can actually go up. But at the moment, we are trading only on the price of gold. So we are not physically trading gold, not physical. Okay, so there are many ways to trade gold, or we can trade gold physically, we can trade gold futures, options, equities, but right now on the MT4, we are trading gold on CFDs, contract of difference. That means we don't own the physical gold, we only forecast the prices of gold or any other commodities that we find on the MT4 account. Okay, so this is basically what's happening. And also the way I look at it is that when I look at the DXY, the USD index, which is an index that compares the USD with 6 other currencies, it looks like it's on a 3-month low as well. So it is actually not really going up, going down, but then it's slowly decreasing, and it is on the bearish, but not strongly bearish. So that gives it a little bit of a hint that if the US dollar in general is driven to the downside, then we still see some room to the upside. But I want to be really careful this week as well, not to actually have too much traded on gold, or too much traded on any currencies at this moment of time. You know why? Because if the speculative mania comes in with the Bitcoin and everything else, then the US dollar will become a safe haven, and then the gold might actually fall. So in other words, gold might go opposite direction with all the cryptocurrencies. So if cryptocurrencies as a whole in a group, like separate group, because gold is in a separate group with commodities, with gold, oil, copper, silver, all that in one group, they come under commodities. But cryptocurrencies come in a separate group, so they might be correlated negatively for now, but I wouldn't call it correlation so much, because it can actually change at any moment of time. Cryptocurrencies can go with gold at any moment of time. It can actually go opposite direction. So I wouldn't call it a fixed type correlation, but I just want to keep the traders very, very aware that it's very crucial that you have stop loss, and it doesn't matter if you put your stop loss in a reasonable appetite, risk appetite. Okay, that actually means that you need to ask yourself, how much are you willing to lose in terms of US dollar? Don't count pips when it comes to risk, because the pips are related to the dollar anyway. But the dollar is more important, because the dollar that you are risking is your account balance in your equity, because your equity balance is not in pips, and your deposit level that you firstly deposit into your account are not in pips either. So it's better to always have it in mind in dollars, so that you know how much you have to cover, how much to go back to break even. If you calculate it with pips, pips needs to be converted to the dollar amount, because we all started with dollar. We deposit in dollar, we make money, and we talk about the profits and the losses has to be in dollars as well. Okay, you can have pip section, but you need to know what is the pip per pip value, so that you know at the end of the day what's the dollar value. That's very important. Okay, so when you actually trade as of today onwards, make sure you have your stop loss in all counts, just because we are expecting speculative mania, and that speculative mania can just turn around all the indicators, all your EAs as well. So just watch out, because this is the time that it does all these things. Okay, sudden movements, sudden changes, because we've got battle between different asset or different markets. You've got the crypto world, you've got the commodities world, you've got the currencies world. They are all going on limbo at the moment, driven by a lot of what do you call that, politics, geopolitics as well, economics, and various other things. So they all want to keep their balance of their own country and their own books, but then they will influence the market quite a lot. So we have lots of volatility, but a lot of volatility comes a lot of risk as well, and opportunities, of course. But then we want to balance that out as best as we can. So this week we want to look at a lot of inflation story. What happens in the US can actually help guide us through trading gold and all other currencies as well, mainly because this week we are expecting the US core inflation data. We can actually take a look. Let me just yeah, this is mainly this whole trading week, because all the crypto traders. Crypto traders are actually the young group of traders coming in, and they are influencing the market a lot with social media and everything else. So yeah, because of news as well, because of economic data. This week we have inflation data as well, so that is why this week is quite crucial. That can actually create a lot of trading opportunities. As we can see here, we have even in Japan, we've got the governor Kuroda, speech as well. And then we had retail sales right there. But I don't know why I cannot actually look at Wednesday and beyond. But Tuesday, tomorrow, it looks like quite heavy in terms of data. So it doesn't really happen on certain session because we have the Asian session open. So whatever the it works like this. The Asian session, for example, we start off with Australia, New Zealand, and all that, and then it will come back. It will come and turn around to Japan, and then Japan, Singapore, Thailand, and all that, right? So it actually does first locally, and the Asian session and everything will actually absorb what has actually gone on in Wall Street as well. So whatever that has gone on in Wall Street will be absorbed by the Asian session. So if you are trading the Asian session when you wake up in the morning, like right now, then you will be impacted by the Australian, the active market there. But then the active market to actually trade for us traders are actually the European market, the UK, European, and US market. So that's why at the end of the day, you will still have to, you will be more active with trading the instruments from this side of the planet, not so much on the Asian side. But then it's important to actually trade after the UK or London Open session. Then you've got more trading opportunities, because if you are talking about only the Asian Open at the moment, then you only have Australia and New Zealand that is actually closing. That is the most active one, because you're not trading Singapore dollar, Malaysian ringgit, and all that versus the dollar. So you're trading AUD, USD, AUD crosses, Japanese crosses, and also New Zealand crosses, right? So you are quite limited there. So then that has to combine with the UK Open and all that. So after UK Open, we'll actually be very, very active at this moment of time. So we are looking at all the crosses. So let's take a look at what's been active today, okay, in terms of the top 10. So the top 10 in terms of currencies at this moment of time, I see that the top 3 has got to do with CAD JPY, USD JPY, NZD USD. But then if you look at overall, you can see that JPY is quite active. You've got JPY here, another JPY here, JPY again. So you've got 4 out of 10 JPY. So a lot of people are focusing on JPY as well. Then you want to look at the trend. You know, what's clear is NZD CAD, for example. You want to take a look at NZD CAD in terms of how clear the trend is, because we have 4 dots here, right? NZD CAD has 4 dots. I want to write that down, and then I want to take a look at whether we have opportunities on the technical side of it. Okay, we want to take a look at technical analysis as well to check the trend. Then we have GBP, NZD as well. So we can see that NZD seems to be quite popular to look at clarity of trend as well, but we don't know that until we go onto the charts. Then we have got AUD CAD as well. So when we look at NZD CAD and AUD NZD CAD, these are all commodity currencies, and because it's very active with commodities, maybe we still want to trade with commodities. So we also want to take a look at currency heat map. Give me a second, I'll check your questions. Yes, maybe just before US time, but not only US, UK as well. Yeah. So UK, Europe, but Europe will happen first, meaning Germany, Switzerland, all that countries, right? So they will open up first in this part of the world, and then London open. Then after London open, then US open. right? So you want to look at it from the UK time. So maybe my time, 9 o'clock onwards, you can start looking at all the markets. 9 o'clock is 3 o'clock, 9, 5, 2 o'clock, 2 p.m. Malaysian time onwards will actually be active with European UK time. But in the European side of it here, or even in the Forex world, the most active market is actually London Open, London session, because the highest transaction for Forex is happening in London. So when London is sort of crossover with Europe and then with US as well, then it will be quite active. So usually you will find like 8 o'clock p.m. Malaysian time onwards, let's say, it will be very, very active because we have overlap. We have overlap of UK trading session, European trading session, and US just open, because US will open about 3 o'clock, let's say, my time. So that's 8 o'clock your time. And then London will open at about 10 o'clock my time, which is 3 o'clock your time, for example. Yeah. So then Germany will open 1-2 hours earlier, for example, because they are 1 or 2 hours before London, actually, in terms of time zone. Okay. So this is the most important thing. Okay. Now, US market, US trading session, like in New York and Chicago, they are not busy with Forex. Okay, they are commodities and also equities in New York. Commodities are all in the Chicago Mercantile Exchange in the US. So Forex market is more driven and controlled by London session. Actually, the highest and biggest transaction happens in London. Okay, so whatever you do, don't miss out the London trading session. That's the most important one. Okay, so let's look at heat map as well. Now we can see a lot of mixed colors right here, but we want to go specifically and look at what's building up clearer. Okay, at this moment of time, maybe a little bit too early to see each column either dark red or dark blue. We don't get that at this moment of time. Then we can also just confirm and look at action bias in action Forex as well. For those of you guys who have subscribed to your Forex early warning, you can use Forex early warning as well. Mine account is still having a bit of an issue, but I'm not having that stop me from looking at all the trends and trading as well. So nothing should actually stop you in terms of any tools. You can always find alternative ways of finding pairs or looking at trends, for example. Okay, so here we are not looking at any clear trends at this moment of time. But then if we look at because from the economic calendar itself, we have New Zealand dollar and the JPY, the Japan's speech right there. So maybe we want to look at which pair NZD would actually be most volatile against today. So you can go onto the volatility chart right here. You click on there and then you go downwards a little bit. And you look at Japanese yen right here, NZD is here, 4 hour plus the daily. Now from this chart, it's giving me an idea that NZD seems to be very, very volatile against NZD against CAD, of course, and NZD against GBP, okay, because that purple area there is closest to these two pairs, the sharp ends, okay? So then I want to look at NZD CAD, NZD GBP, GBP NZD as well, of course, and then we can take our time to actually look at it from a technical perspective. Okay, so let's get to the chart right now. So with the chart, for example, I still see potential for gold, but I want to be very careful. After London Open, I want to look at news that comes out, whether or not the crypto speculative mania will actually start. If it does, then we might have to cut a little bit of losses early for buying the gold, okay? So I hope you've not bought too early or too late. So if you're buying it already, then you are still okay because our TP is only at 1897, let's say. I expect it to go up there a little bit and then start to reverse. So if, for example, it has room to go up, it will go up to the 1897 area, but maximum is 1900, maximum 1900. There's a huge resistance there. So I'm expecting it to move a little bit up. It may come down earlier, maybe at 1897, hopefully, so that we hit our 6 TP for gold. And if that happens, then we want to also take a look at whether or not the crypto mania, what do you call that? Crypto mania reasons come in. So crypto mania means that all the crypto start going up, and then US dollars start going up as well because it's used as a hedge for the volatility of cryptocurrencies. And that is where you will see correction for gold. I still say it's a correction because this is still inside the bullish zone, and crypto mania or speculative mania for the cryptocurrencies usually don't really last very long, because that's why it's called a speculative mania, meaning that they are just driving it with all kind of social media forums and everything else just to push the prices up, create a lot of news, a lot of fake news as well. All these young people, they are doing all this kind of stuff now, and that is basically what is most probably going to happen, but we will just wait and see. So this is good as well for us to escape trading gold, so we can rest trading gold when that happens, so that we can then go into buying of other currencies, and we can focus on forex pairs. Okay, so that is the time to focus on forex pairs when that actually happens, when the speculative mania happens, when cryptocurrencies go up, all the crazy ones go up, like for example Dogecoin, even Bitcoin, GME, I think it's called, the gaming ones, and various other ones, Cardano, various other ones that you may not have heard of, will all start to go up. So it will create a bubble. So this is basically, speculative mania is also like a bubble that is created, but it is called meme stocks mainly because it's just not because that it is good, performance is good, or the company is really good. It's just being created. So it's being created by gossips, in other ways. Okay, so that's called meme stocks. So this is what we expect for this week. Might happen, might not happen, but most probably would actually happen. So how do we trade that? Is just to escape all our risky ones like gold, silver, all these ones. You want to stop trading them, eventually stop it with take profits, but then we will shift our focus to currency pairs. Okay. It depends. When you want to cut losses, it's actually a very personal decision. I mean, would you like to cut your losses now when it is actually just about 100? Because you would have to have a mental losses are personal, and losses are mentally needs to be inside you to be comfortable with. So you cannot cut losses when you are already losing 500, 700, 800, for example, and say that you want to cut losses on that, mainly because you didn't have your stop loss. So if you have your stop loss, then you will need to firstly ask yourself, what is your stop loss level in terms of dollars first. So in terms of dollar, your personal dollar stop loss is 200 or 150 or whatever that is, then you have your stop loss level. But whatever you want to cut losses actually is under your stop loss level. So if your stop loss level is already planned at 200, when you want to cut your loss early, that means it has to be under the 200. Okay, not when it already gone beyond your stop loss level, meaning you didn't have stop loss. You cannot say you are cutting your loss. You are just going to close your trade, not cut your loss, because you cannot cut your loss anymore. It's gone beyond your stop loss level. You have already gone beyond your risk level as well. So stop loss level, cut your losses early means under your stop loss level, earlier than the stop loss getting triggered. So if the stop loss is going to trigger by at $200 loss, then when it's already losing 50 maybe, or 60, depending on what you can see as well, depending on you checking with me as well, and to see whether or not you should wait or you should not wait. Then you can actually ask me, and then we can cut loss early. Usually I like to cut loss as early as possible, meaning small, very small movement and small number. If I'm already say losing close to 100 and my stop loss is 250 or 300, then I consider it quite good as a early stop loss. Usually early cut of losses is at least 50% below it. You know, like you see like 200, then you're already losing 100, that distance, and you want to cut your loss. So that is basically what it means, cut your losses early, but only if you have already set a stop loss. If you have not set your stop loss, it's difficult to have that boundary, you know, of where is your early cut of your losses. Okay, I hope that makes sense. Okay, good. So that's basically it. But that's why I am emphasizing this this week, especially. Please do not forget to put stop loss, because stop losses, because at this stage, this kind of market conditions, there is no way to take control of the market, because we have too many strong forces that are outside. We cannot take control of the market.
Okay.
But then at this time, it's too many strong forces that I foresee that, you know, when bubbles like this happen, you have speculative mania, you have a lot of other things happening, and then you see commodities rising and all that kind of things. It usually can bring a big hit to the EAs, your indicators and all that. And it is not that it doesn't work, it's just that it's too volatile. All these movements are too volatile in the market for anything technical to absorb it in high accuracy. Okay, so that is why I prefer to use a lot of price action, and also the patterns works at this time when it is very, very risky, because there is no, because these are all called leading indicators in a way. So when I draw the pattern, I use Fibonacci, and various other things on the fundamental side of it are all called leading type indicators. If we are using indicators to absorb the price of the past and then to predict the future, these are called lagging indicators, because it cannot really absorb, it cannot really predict what could actually happen. So maybe for the indicators and the set of EAs as well, the data that is going to come from the speculative mania, from Dogecoin, how it impacts the market now, it's all going to be very new. So what would happen is that you would need to upgrade your EAs and all that after this scenario, maybe another 1 month, 2 months, 3 months, then your EA can absorb all this one as new data. Then it can actually help predict a little bit of the upcoming market when it happens again like this, you see. But because all these things are quite new now. Also with gold, if you look at gold on the monthly chart, you see, on the monthly chart, it looks like this. So you can see that we don't have any reference of price anymore beyond this area. Beyond this area here, beyond 1900 and above, we cannot look to the left too much as well. So it's very, very careful. I mean, we have to be very, very careful. If we have got price structure looking to the left, candles, mother candles, support resistance, and all that to the left, and it's not blank like this, then it is actually much better to trade. But then because we don't have much reference, we have to absorb a lot of fundamentals, data, news as well. And I have to do a lot of research on gold as well. I have to research the miners, I have to research whether there are protests anywhere. I have to research the bilateral agreement between one country buying gold and the other country buying gold, whether there is supply going down, demand going up or not. So I have to rely on that kind of data, and then I absorb it with what I have in terms of the price here. Because once it goes up above already, let's say almost 2000 and above, let's say it hits that area and it goes above, then there is no, it's like you are floating in outer space. You don't have any net at all to catch you. So we have to be very careful trading gold on that side. But in my expectation, once it goes to that level, then it can only go up a lot more, you know. So at this moment of time, it's still playing around here. This is a cup and handle as well. So it still has to go down at least 50% of this distance here for gold overall. But when that will happen, we don't know. It will zigzag, price come down, go up again. So as long as it hasn't actually burst out from the I think 1993, 1995 area and above, then we are still able to use some price action for reference purposes. Okay, this is for gold. So this is the reason why for me as well, it's difficult to use reference point, price action, and all that technical analysis, proper technical analysis on cryptocurrencies, because you get the same thing when it comes to cryptocurrencies because it's new in the market. We cannot see to the left a lot of data, but with currencies, for example, we have a lot more of price reference to the left. You see, so because we've got price reference to the left, we are in a better sort of netting when it comes to technical analysis, especially via price patterns or price action. So this is basically what's been happening, because the price currently for USD JPY, for example, is here, around here. Yeah, then if it goes up as well, we've got all these as your reference point. If it comes down, we've got all these as your reference point. And then if you go on to shorter time frame, you've still got loads of reference point as well. So this is still a better netting, and we can actually you know, trade like that in a better position. That's why I pick I pick not cryptocurrencies but currencies market, because it's got a lot of data. It started, you know, way beyond you know, 1996 and beyond, and basically 1996 onwards, then we've got all these data basically coming into the MT4. So we've still got data, but not for cryptocurrencies. Cryptocurrencies, we don't have that data. Okay, and a lot of data are made up as well, so it's quite risky. But to trade cryptocurrencies on CFDs is still better than trading actual crypto. Then because you can actually just, you know, forecast on the price fall right along the trend, down or up. So that is why it is still better to trade on CFDs. Okay, especially on anything that you find on how you call that, MT4. So we are also doing a little bit of analysis with top 10 stocks in the US as well. We are expecting Amazon to go down. I mean, just purely price action itself, we can see that there's downwards, and it started here, but then it didn't enter the rate zone. Now Amazon has the rate zone, but this is my rate zone. It's not the market rate zone. This is just through my own analysis that I see that it can actually come down. Now the current price Amazon is 3,199 area. So I see that it has a potential to fall to the 2,959 or 2,960 area. Okay, so that is this is what we as traders on the MT4 can actually do. But a lot of other traders who are trading Amazon directly from the stock exchange, they have to only trade on the stock going up. So they would be losing at this moment of time. They cannot actually gain anything from the fall. They have to wait for it to rise again, right? For maybe another 6 months, 1 year. So they just leave it there, and then they basically cash it out when they gain. But at this moment of time, you trading Amazon on CFDs, you can actually sell it, and then the more it falls, the more money you actually make, and then you take profit at this area here. So that's the advantage of trading anything on the MT4, especially on CFDs. Okay, so it's all CFDs anyway. whatever you see on the MT4. Okay, let's get back to a little bit of trading on NZD. Let's get some one or two trading opportunities right here. Let's look at Nzd USD first, because the interest has actually been on Nzd pairs. We want to take a look a little bit on Nzd USD. What we want is volatility as well as trend clarity. Okay, at this moment of time, you know, the last candle itself, it's trading at 71.74 against the USD. NZD. I look at the three lines as well. It doesn't really show me very exciting movements, but I want to look at the other NZD pairs like GBP NZD. GBP NZD on the daily chart looks a little bit better, but what I want to do as well is just to go on to indicators, and you can put your average directional movement index and look at whether or not the blue line is above 25. Now, whatever trend that you see, if it is above 25, that means that trend has strength. Now, this is on the upside at the moment. We have majority of candles on the daily chart for GBP NZD. It's actually trading on the upside. But when we look slightly to the left, it's got a bit of a resistant area right here. Now, the ADX is telling me that we definitely have got strength to the upside, mainly because it's above the 25 level. So let me make this thinner so that it's more sensitive to the candles. There you go. So I see this area here. I will put it onto the close opening price of the bearish mother candle, also the high price of the bullish mother candle right there. So I've got a bit of an area, and the highest price there on the green line stops at 97.60 or so. So you need to look at 97.50 to actually be sort of the resistant area. But let me just see. It's trading exactly at the 97, very close to 97.20 psychological number. So is it going to reverse now or later? So at this moment of time, GBP and ZD looks like it might actually reverse. We don't know that yet. So, but we are probably looking at upward movement more than downward movement for GBP and ZD, but it's not time to buy yet. Okay. We'll look at GBP AUD. Yes, of course. GBP, let me just write it down. AUD, NZD USD. We'll just go back and look at it again. Give me a second. And GBP JPY. Yeah, sure. No problem. You can look at those ones. So we'll look at GBP and ZD for now. For now, it's, if you want to look at short term, whether you can buy now or sell now and stuff like that, is very risky because it looks like it might want to reverse first. Okay, so it's reversing. Overall, it's an uptrend, GBP and ZD, overall uptrend, but there may be a bit of a correction at this moment of time. So if I get this away, we already know that the GBP and ZD strength to the upside, there is strength, there is a strong trend to the upside, but maybe now it's correcting. So we are looking for whether or not you can actually buy or sell at a short period of time for this moment of time. So what we want to do is we want to put in the stochastic, okay, just to see whether or not there is a reversal at this moment of time. We use divergence for reversal. Okay, so here, this is for 4-hour chart, daily chart. Not much of a divergence at this moment. Maybe a simple correction might be there, but there is just no clear. We'll go on to the neutral 1-hour chart. Okay, there's just no divergence. You got high, lower high here, this high, and this high, lower high as well. This low, higher, higher low, higher low. So there's just no divergence at this moment of time. Here and here as well. So not yet. So maybe it will continue to actually go down probably because it's already reversed. It's already to the downside at this moment of time. GBP NZD 4-hour chart. Remove that one there. Okay, so we'll get rid of this one since there's no divergence right there. So now we use price action just to see what could potentially happen. Now, on the daily chart, it's quite clear. It's already shown you that very strong resistant area. 2 lines I've drawn based on that area right there. We've got some wicks as well. So this is a border of resistance already ready there for you. So it's showing you that price is now retreating and going down at this moment of time. So I will just mark that area there. Okay. So it looks like prices already sort of under that area. And as it goes lower, I would think that it will go like a rock going down much more once it goes here, this area here, 9700. So now it's only at 9720 psychological level, right? So when it goes at 9700 area psychological level, I think from there on it would actually be falling much more, especially 9700 and also 9700 is one area. I'm just going to put it there. It's also a psychological level, 9700. So this is where it's more confirmation for it to actually fall much more, and you can forget about your buy position once it goes to 9700. And once it goes 9700 and go much more lower at the 96 area, 9680 area, then we may have a big fall, and it would actually be, I would think, a very big downtrend. The reason as well is because this could actually, once it actually starts to reverse and let's say goes to the 9700 and then start to come down, it will then confirm a double top. Okay, this double top will confirm the strength of the NZD, but the weakness of the GBP. So there may be something out there. I don't know about whether there is some new news coming in, but I would suspect that there may be some negative news may actually fuel the fall of GBP versus the NZD or GBP versus the other pairs. We don't know this yet. So then we just want to wait basically. But at this moment of time, if you go on to the 30 minutes chart as well, you can see that the price has already fallen. So we are more biased to the downside for GBP and ZD. So what you can actually do if you want to trade like really short term, you want to actually look at the mother candle to the left. Now the trend, the candles now is already trading at 1.9724 area, and then it might actually be falling to the 97 10 area or so, 9712 area, because this is the mother candle that you can actually be trading on. But this is your risk to actually take, whether you want to really trade now or you want to wait for later on and stuff like that. If you really want to trade now, then you need to be ready for the risk as well, because me personally, I wouldn't be taking this trade, but there may be an opportunity to short it until 97.13 area. But this is a scalping type sort of approach that I usually don't do, but this is for those traders who still want to look at whether there is some little bit of 10 pips or something like that to actually trade. There may be an opportunity here to trade from now. If you're asking me when you enter, you have to enter now if you are taking the risk, because if you are taking the risk, you are not polishing the numbers with psychological numbers anymore, because there's no need to, because if you are taking the risk, you're taking the risk, and you need to know how much per pip you are trading. And if you are trading per pip $1, that means you are taking 10 pips there, you want to make $10, let's say, and you are willing to risk how much, or maybe you don't have stop loss because you're already taking, because this is a scalping type approach, then you don't need your stop loss there, and you know that you lost that amount, you close the trade and you just escape basically. So if you lose how much you are willing to lose, let's say $20, then if you are already reaching $20 in loss, you just close your trade, or you can put your stop loss at $20 or $30. It's entirely up to yourself. And then, or double that, because you're only making about 10 pips here, riding along that bearish candle there. So this is for those traders who really want to, just pick a couple of pips for now. And that is basically the reference point is this mother candle right here. So you've got the mother candle area from the top to the bottom. So now it has gone up already. Now it's due to come down to this area to find support, most probably, before it goes up again. Okay, so that is short-term GBP and ZD. We'll move to GBP AUD. Let's move to GBP AUD. All right, GBP AUD. Let's look at it. Okay, so now for GBP AUD, let's look at it. It looks like it's got uptrend type potential at the moment on daily chart, GBP AUD. Against the AUD, it looks quite similar in a way to what we've looked at just now. GBP Nzd, GBP AUD. It's trading at 89.93 at the moment. So we have got the resistance level at 83. No, sorry. Yeah, 83.00. Okay, so 83.00 is your psychological level, very close to it at the moment. So it can actually reverse at any moment of time. And I think it has more potential to reverse and come down also because of this area here. It's very strong resistance by a bearish candle coming downwards and then take price all the way down. So I see it has potential to come down and follow this mother candle here. So we have the potential for it to fall after it has fallen at 82.80 and below. So that means your selling price could actually be at 82.70. So once it reaches 82.70, I'll just put the price there. So 82.70 is the entry selling price, okay, because it has to be 10 pips under the 82.80 psychological level. So you can actually sell pending order, sell 82.70, and then your take profit needs to be above the 81.50 area. So 81.50. 81.60 will be your take profit. Now, this is the biggest gap, basically. So we can break down this potential gap. This potential gap for your sell can actually start at the price I've mentioned, 82.70. And the total amount of pips potentially you can make is close to about 100 pips. Close to about 100 pips. So you can break that 100 pips out, I think, in lower, like smaller bits and pieces. So I'll get rid of this, get rid of that price. Okay, so as it comes down, we just want to wait until it comes down and trigger your 82.70s area. We have some area here that we need to watch out for. So I'll mark this area here. Let's say 82.40. So what you can actually do is take 20 or 30 pips per time as you enter the sell at 82.70. So 82.70 goes down, let's say 82.60, no, 82.30. So you can actually take profit at 82.30. That's 40 pips. Oh. Right. 81.60 is your maximum support area. So your first TP, potentially you want to enter 82.70, exit or TP at 82.30. So that is 40 pips. Then later on, you re-enter again. So you re-enter only after price goes down at 82.10, I would think. So 82.10. This is your second entry for your second TP. Oh, 82.10. And then you need to respect this area here. It seems quite strong. 81, 82.10. 81.90, 82. Nah, that's not good price right there. Probably not a good one here because you have a very strong support there at 82.00 area. So maybe we stick to just that one entry pending 82.70 and then take profit 82.30 for now. And then as it comes down stronger, only then we plan our second entry, because now it doesn't seem very attractive, the number of pips, because we have got support that we need to be very careful with. So for now, 82.30. So you have got your area right there. 82.70, 82.30. 82.70 entry, 82.30 is your take profit. So if you're asking about stop losses, you need to figure that out, because your potential is 40 pips. So 40, you double it to 80. That is your stop loss level, 70 or 80 pips. Okay, so also you need to ask yourself, how much are you going to trade in terms of lot sizes as well? Is it $1 per pip? Not one lot, I hope. It's just too risky. So $1, $2, that's entirely up to yourself. Okay. All right. So that's GBP AUD. Now, let's take a look as well at GBP JPY. Okay, that's been going down now. GBP Nzd, that's good. All right. Let's look at GBP JPY. Okay, GBP JPY. Right. So here last week, I think I have given a trade signal to actually sell at this area here, selling at 153. If I'm not mistaken, it's 153.40. You sell and then you take profit at 153.10. So that is 30 pips. Okay, so again, entry at 153.40. 153.40 entry, sell entry, and then take profit 153.10. 153.10. Okay, that's the sell entry. Okay, cool. All right, there we go. All right, so that's basically it. It's looking like it's just, ready to fall like a ripe fruit from a tree for GBP JPY. So my guess is JPY will function as a safe haven. So JPY will go up in general with all other pairs. So GBP is looking like it's got a lot of resistant area that it is respecting. So GBP as a whole probably is going bearish at the moment. Let's double check. Let's look at GBP map. So GBP against the USD seems to be bullish, but then overall you can see that it's starting to be bearish against most, and quite bearish. I would think it's building up its bearishness most on JPY. So that's a good sign. So it is building up on the JPY bearishness, and this red zone, I have actually drawn it since a week and a half, I think, ago, almost 2 weeks ago. And this is based on this area right here, this very big bearish candle right there. and that bearish candle is worth about 400 plus pips, 490 plus pips, which is almost 500 pips worth of bearishness in this area. So this is a bearish zone. It's already entering the bearish zone. So what this means is that you can sell. Now, if you're asking me when, you can sell anytime. As I've mentioned, you can sell at any time when it is already inside the selling zone. When it's inside the selling zone, you can actually sell, but then to make it better for you, you can sell by tweaking with the psychological numbers. It is entirely your risk whether you want to tweak it with a psychological number, you want to wait, or you want to just sell it right now. It's entirely your decision. You can do that much more if it is inside the red zone. If it is not inside the red zone and you still want to sell or you want to buy, it's probably better to really tweak it using psychological numbers. Okay, so this is basically it. All right, so now with the prices at this moment of time, it is trading at 153.83. Now 0.83, right? 153.83. So 83 is what you use to actually figure out whether or not it has been tweaked, or you have to tweak it based on psychological numbers. So 0.83 is not a good price to sell or buy, because it is too close to the 80 psychological number. So because it's too close to 80 psychological number, if you want to sell, you have to sell under 80. Under 80 by 10 pips. So that means 70. All right, 80 minus 10, 70. So 153.70 is your selling price. Okay, so 153.70. So let me just do that. Okay, so that is written here, sell at 153.70. Now, as 153.70 goes down, down, and down, you want to look at where you can actually take profit. Okay. So 153.10, your take profit could potentially be 153.10. Or 153.30 would probably be a little bit better. Okay, just to keep you safer from any reversals. There you go. Right, so that's 40 pips there, potentially. You need to plan your stop losses as well. So your stop losses should actually be at least 70 to 80 pips in stop loss. Okay. Okay, there you go. And yeah, this is building up now. The sellers are actually gearing up to more selling of the GBP JPY. So I'm trading at the Black Sea area right there. So that's the price that I've given you as well. Okay, sell 153.70, take profit 153.30. Okay. Okay, as it goes down more under the 153.00 area, then we can actually plan much more selling, because we've got loads of selling going on at the moment. In a big picture perspective, if we look at even the monthly chart, you've got a double top kind of thing going on here. It's already started to reverse. So most likely it wants to reverse much more, as opposed to a bullish. If it appears to be bullish, it'll get blocked at the 200 EMA anyway. And then now it's actually too close to the resistant area. And we have a giant bearish area to look up for as well. Once it comes down to this area and come under the red box especially, we have this area here with the mother candle. This mother candle area is 2000 plus pips. Okay, so that's why we want to really be very, very careful with trading. But then the bias with GBP, JPY is to the downside. In my guess, they will pump in more money into the safe haven of JPY. So JPY will go up, and then it will push down the GBP a lot more. But then while it gets pushed down technically, maybe news will come in as well to actually tell us that it is more negative, and then it will actually become the fuel to push it down even more. So this mother candle that is worth about 2,000 plus pips, it has actually started at this area right here, which is opening price 160.38, and then the closing price of that mother candle is 137.32. So it's 2,000 plus pips. So now it's going up, it's showing that you're going up and all that, but it's just too close to this resistance area right here, which is 154.90, which is very close to 5.00 psychological number as well. And we have got many resistance in this area. We've got another very strong resistance right here as well. So it's not really looking very good in terms of, I put it in yellow so that it's more visible. Okay, so we've got that as your resistance line, and also this here resistance line. Okay, so 155.00 is also the psychological level. I'll just mark the 00. So it's right now the wick of the current candle has already just touched 155.00. So I see that all this area has already blocked the price from going up higher. So we hope that it starts to retreat and create more bearish candles. As far as it has more bearish candle, then it would actually go down much more. We have got this very big candle here, 2,000 over pips, to support the sellers to come down much more. And then all these move here are made of very, very bearish candles as well. And then if we look here, again, more. So, and if we just move a little bit there, we can see that all this fall actually happened here as well. So we've got all this bearishness area. So I'm just taking this bearish candle here to point out that we are now at the moment already in a bearish zone. So you can trade anytime for a sell, but it is your risk to do that. Me, I would trade only for a sell, but I need to plan for the prices tweaked with a psychological level. So the direction is sell for GBP JPY. Okay. And I won't look at anti-trend trading. I just want to look at selling at the moment for GBP JPY, but I want to enter at the right prices as well. So right now it's not right now you can actually sell because it is at 153.90. So if you're selling, make sure you are exiting, you know, maybe at this price right here, which is 151 area. But this, we are looking at monthly chart. So what you need to do is to go into shorter time frame, 4-hour chart, 1-hour chart, and then you want to look it from there. So here, for example, you can see that you've got a support coming up here. So make sure you exit 153.70 before it hits 153.70. You need to exit. So you've got some pips there to play, to sell, maybe about 20 plus pips or 20 pips, let's say. You want to make the 20 pips, so you sell now and then you exit 153.70. Okay, that's basically how you trade in stages. But we've got 2,000 plus pips to make actually, but we want to take that, you know, step by step, stages and stages, until the prices are going down much more. Because we don't know, it might actually just reverse here, go up, go down, and then make a sideways trend as well. Okay, guys, any other questions before I end the session? All good so far? Any questions? Okay, good. All right, guys. If you guys are happy or any questions, you can always just direct message me or message in the group or any way you want to ask me questions. Okay. Yes, correct. Nzd USD. Let's take a look. The EuroCAD pending order, I think if you guys are still on the pending order on the buy, if I'm not mistaken, you can close that because it's gone down a little bit too far already. You can close that pending order, no problem on the EuroCAD. Okay, I don't think it has triggered yet. It's too far away. Nzd USD, let's take a look. Okay. Okay, so Nzd USD on the daily chart, it's above all the three lines as well. It's trading at the 71.75 area. So it looks like it's biased on the upside. It has some bullish candle to the left. Okay, 4-hour chart does not look very good. It's going up, but it may actually reverse at the 200 EMA area. So it's got a little bit of space, but not too much space as well, because I'm just a bit concerned with reversing at 71.80 because it is okay. Let's take a look at the strength of the trend at the moment on using the average directional movement index. It's got no trend to the upside, especially in a daily chart. So if it does not have trend strength to the upside, doesn't mean it will have strength to the downside. It just means it doesn't have strength of the trend in general. So it doesn't have participation of traders going in at this moment of time. So if I look at short term as well, it's quite unpredictable, meaning that it's not clear, the trend, but it's picking up in terms of the upside. I think the upside is picking up, the correction maybe it's picking up, but it's not a very nice, clear type pair to trade for now. Yeah, because it's going to cause a little bit of complication, because the daily chart, maybe at the 4-hour chart, I'm looking at the daily chart, but then it's actually 4-hour chart kind of scenario. Maybe a little bit of upside, but not so excitingly upwards. It might actually be, there is a chance if it does actually go up driven by, you know, news or something like this, it can actually go up to this level here, I would think 72.20s area. I think just to be safe, you need to exit before 72.20 if you are buying. If you are buying, you need to exit before 72.20. You are at 71.81 at the moment. It needs to go above the 80 psychological level. It has to go up to 71.90 at least. Then you will see a little bit of pickup. So something might drive it or something might not drive it up. So if it lacks news or anything fundamental, then it will not go up so much, might go up just a little bit more, and then you know, either at 72.00 to actually start to come down, or 72.20. So that's the risk that you have with Nzd USD for now. But the downside seem to be a little bit more, if it does go down much more and then something negative comes in for NZD, then you are looking at this zone as your selling zone right there. Okay, so your selling zone will start from 71.57 area, which is close to 71.50 psychological level, and down to this area right here. So this is your sell zone. So if you want to do anything, don't sell yet until the price goes down to into the sell zone, the red color. I don't have a very nice big, you know, good buy zone, but for the buy zone, it would only be starting around here, most probably. and it would end a little bit sooner, most probably there, or even here. Okay, so that is the buy zone seem to be very, very small, and it's not yet starting, or it's, let me just do that. Buy zone is from 72.20 above right to 72.65. So that's your buy zone. Will start only at 72.20 and above. Above the 72.20 psychological number, then you will find the buy zone. At this moment of time, it is in between. It is in a no man island, and it's no zone territory. So that means, you're not supposed to buy or sell at this moment of time, but it depends on the trader as well. If they, have got their own techniques and they see this opportunity here, then you can actually, buy or sell depending on what you feel you want to actually do based on your own strategy. But in terms of laying out where the buy could be, it's there, and the red one's much bigger. And I see that potentially more selling would actually be more preferred in this area. There is a bit of a Z pattern going on here as well, if I'm not mistaken. No, not yet. So no Z pattern there as well. So it's just purely price action. If it does go down a little bit more, then you've got A here, B here, C here, D to sort of confirm that downward type movement. But let's see what happens. But that's basically it for Nzd USD. Okay, all clear for Nzd USD so far? Okay, good. All right, so I'll end the session here. Hope you guys are okay with that. And any questions, just ping me directly for any questions with screenshots and your TP, your intended TP, your intended stop loss, your intended entry as well. Okay, so that will help me usually to see clearer. Okay, thank you guys. Thank you all. Have a great pipping week ahead, and we'll see you again on our next webinar on Wednesday, the Wednesday's midweek webinar. Okay, guys, take care. Have a good one, and we'll see you again soon. Bye-bye. Thank you. Bye-bye.